fighting this invisible war called the coronavirus.
Kind of where you see the gold price going.
In the past 20 years, gold's been up 80% of the time.
China trying to back its currency with gold.
In the past 10 years, it's more than doubled Berkshire Hathaway.
The best teams are the ones that focus on those numbers.
Those companies that have the greatest revenue per share growth.
They're riskier, but they have massive upside. Well, what they think about Bitcoin.
It's going to go up like an Andy Warhol painting.
Do you think Bitcoin gets to 50,000 at some point? Hey everyone, welcome to another episode of the Market Disruptors Show. Today I am sitting down with Frank Holmes. He's an investing legend. I'm super excited to sit down and talk with him. He is the CEO of US Global Investors, a billion-dollar fund. Really a lot of focus on precious metals. He's won multiple awards. I think he can tell us, but more awards, more gold awards than anybody else. He's regularly on TV, CNBC, Fox, Kitco News, etc. Someone I've been following for a really long time. And of course, you know I always love to try and get as much as I can from people like Frank. So I appreciate Frank for joining us today. Thank you so much.
Great to be with you, Mark.
Yeah. So like I said, I've been following you. I see you around. I look at your predictions and what your fund is investing in. And I gave you a short little intro, but for those that don't know who you are, just give us a little bit of background about precious metals and your fund and stuff.
Well, Mark, I'm originally a Canadian, so I've been living here 30 years, so I'm a Tex-Can. Y'all come back, eh? And so that experience in Canada is Toronto is something like 60% of all mining finance in the world. And it's a real strong hub. And that helped me coming down to Texas, buying control of US Global, and repositioning it. So it just wasn't a gold complex of no load funds, that it was also first to go into Eastern Europe fund, first to go into a China region fund. So trying to be a pioneer, but being first where we see big macro forces taking place. We created the Eastern European fund because we saw the EU being created and the Euro being created. And we said this will be an unleashing of all this intellectual capital and trillions of dollars. And it won. Basically, that fund went from $4 million up to over $1 billion in assets.
Wow, that's good. I mentioned briefly, so you said that you kind of took it from just a gold only fund, and you've kind of grown that. But I did kind of mention briefly that you've won a bunch of gold awards. I know, like Mining Man of the Year, some things like that. I mean, you've really been involved in the gold space, though, a lot.
Well, I've been so blessed. Growing up in Canada, in Toronto in particular, and having mentors like Pierre Lassonde, who created the GLD when he was the honorary chairman of the World Gold Council, Seymour Schulich, the biggest philanthropist in Canada. Those two guys put together and created Franco-Nevada, the largest gold royalty company in the world. I took that company public in '83. It was my first deal. Wow. So being mentored by these thought leaders, I'm very blessed. And then knowing the whole from junior exploration up to senior production, Barrick, Newmont, all these stocks in Canada at one time, we were the primary market makers where you put up capital the old days on the floor of the stock exchange for all the gold stocks. So I have a long-term relationship with this industry. Wow,
I mean, those are the giants. I mean, Barrick is the company that Warren Buffett just invested into. What do you have any opinions or any thoughts on that? I know a lot of people were shocked he entered gold. I made a video. Well, he didn't just buy gold; he bought a gold company. What do you think about him buying into Barrick?
Well, I think he was, I guess, missing out on the action. But I think the FOMO experience he was going through was by his investment team saying, it's just unprecedented, this money printing. And I've been talking about the G20 financial cartel. The finance ministers and the central banks of the G20 countries meet on a regular basis, and they don't care who the prime minister or president is. They have their own network, and fighting this invisible war called the coronavirus, they're all collectively, shoulder by shoulder, printing money by the trillions. And that is basically a key factor for all commodities, and in particular gold as an asset class. He does believe in buying production. So what does he buy? I always thought if you looked at just financial metrics, Newmont's more attractive than Barrick. However, Mark Briscoe is the CEO, and I was a seed shareholder of creating his company, Rand Gold, over 20 years ago. Mark Bristow's a PhD in platinum. Mark Bristow's a guy's guy. He likes to go hunting. He used to go to South Texas on a regular basis. But he's a very smart guy and he has a big time vision. So I can see Buffett betting on the jockey in addition to the horse because he's really focused on free cash flow yield. And Newmont is now free cash flow yield. And any of those companies that really focus on building free cash flow yield are getting buyers outside of the gold arena like Warren Buffett. And they're seeing the generals coming to buy those stocks.
Yeah. Now, for everybody that's listening, Frank is he's already filled you in on his background. I mean, he's the guy in this space. So I do want to nail you down on kind of where you see the gold price going, and then I want to drill down past like gold price, and we'll get into better ways to play gold, talk about gold mining stocks and stuff like that. So for everybody listening, make sure you stay tuned because we are going to get into some of those specifics. But I want to just spend a little bit of time on what you just said and really the bigger picture, like the catalysts that are pushing this forward. And so before we get into those kind of specifics, we'll talk about your big thinking. And I know I've seen some of your videos and your fund is kind of like this macro fund. And I watched one of your talks where you were talking about these, a top-down approach and these like 5 major factors that you look at for this top-down approach. And I know you just mentioned the banking cartels, inflation being one of those. Tell us how that framework works for you.
Well, in the laws of physics, force is equal to ma, and m is mass, and how fast is that mass accelerating is a force. So when we look at GDPs or consumers, we can take China and India, affectionately known as Chindia, and they're 40% of the world's population. That's 40% of the mouths to feed. That's 40% of the consumers of the world. So that becomes a macro consumption force. When we look at global trade, it's China and America. Collectively, we're 40% of all global trade. So when we have a spat with China and America, then naturally it's going to impact, it's a global force. Now we're seeing the PMIs of these countries turn up. We're seeing the sword rattling of between China and America actually slowed down compared to 18 months ago. And I think that this is another factor that is very positive for the overall global commodity demand. China is 53% of commodity demand. Very important. If we look at China and India and Southeast Asia, or China and India alone, they are 53% of all gold demand for love. Wow. So when we add jewelry as a dimension of love, so we would say that 60% of all gold demand is love, 40% is fear, and that 40% of fear is excessive money printing and negative real interest rates.
So when you say love, you're saying people are buying it because they love it, meaning like jewelry. Like, I love gold jewelry, I'm buying it. And then the fear, the 40% fear, using it as I kind of talk about like a hedge, right? A chaos hedge. I'm using it as insurance for my portfolio. Currency
debasement, hedge, you're right, absolutely. And that, by the way, Mark, is what Ray Dalio talks about. And he has the largest hedge fund in the world, over $160 billion, and he always has a position in gold. And I've basically tried to position people to recognize that the 10% golden rule is make sure you always have 10% in gold, and you rebalance once a year or once a quarter. And I think that this is an important thesis. When I try to watch the CNBCs, most of the time they're negative on gold. But in the past 20 years, did you know that gold's been up 80% of the time?
Wow, I didn't know that.
So, and if we looked at some of my favorite royalty companies like Franco-Nevada, in the past 10 years, it's more than doubled Berkshire Hathaway. If I look at gold since the year 2000, it's outperformed the S&P by 3 times. 300, there's a huge number difference. So having a position in gold is actually wise and rational.
Yeah. I talked about recently, and I think I got it from Rick Rule, but he was just talking about how the allocation to gold, maybe historically was like 1.5%, 2%, but it's really come down to like less than 0.5%. But then we saw that the Ohio Pension Fund a couple of weeks ago said they're going to put 5% in. And imagine if everyone just put 1%. Do you see something similar like that? Like it's really the allocations have come down, but you think they'll come back up?
I do think they'll come back up. And it happens as long as the secular bull market, which started in January of 2019, that is the 50-day average price over the 200-day moving average. It can fall up and below the 50-day, but as long as that 50-day trend is above the 200, it's a secular bull market. And the first to do this was the state of Texas. Texas built their own vault, and they moved all their gold out of New York City back to Texas. So I think you're going to see other pensions look at that, because most of the pensions have a big bond portfolio, and a lot of them used to buy tips as a proxy, but actually buying gold and trading around gold is a better proxy, I think, than overall just buying bonds.
It seems like it seems like, as the inflation continues to go up, and then the rate of return on bonds goes down, especially like treasuries and whatnot. I mean, maybe we're definitely into a real negative return, right? So it almost makes sense to just hold gold. Like, why lose money holding treasuries when I can just hold gold? I mean, is that a big driver for funds?
I think so. I think you're going to see that grow, and what's also witnessing is in the past 3 years is a big increase on new central banks buying gold.
Right.
I thought it was interesting. 18 months ago, Colombia, the country of Colombia, bought gold, and then they recently had to sell because they needed the cap to deal with the slowdown in the economy, the coronavirus. But actually, if you love your country, you should have gold, because it's a way when a crisis happens to be able to live off of.
Yeah. So you talked about the love and the fear. It seems to me it's really not the love that's probably driving the market. It's probably more the fear. You talked about the G20 banking cartel. I mean, their policies are forcing everybody into other assets out of currencies. Do you see that being the driver?
Well, what's important, Mark, as mentioned to you, that 20% of the time gold has been up since the year 2000. 80% of the time since the year 2000.
Right.
So why is that? Because the love trade each year is taking more gold out. As their GDP per capita of China and India is rising, they buy more gold.
Right.
If you go back 30 years ago, China and India were only 10% of the global gold demand. Now they're 53%. And it's highly correlated to GDP per capita. So what it means is that when markets golds fall, it's going to have a higher low to it. And then along comes the money printing and the fear, and it makes a new higher high.
Right. Yeah, that makes sense. And I've had a lot of people, because I talk about gold quite a bit on my channel, and I've had some comments that say, well, gold's back to its all-time high. It's too expensive now. But I'm like, well, but the cycle's just starting and we're at it, right? So I guess, is that what you're seeing? So even though it did beat its new all-time high, it's at the beginning of a cycle and not the end of a cycle like it was in 2011?
It is. And I write on our website, usfunds.com, I have a whole set of articles called Managing Expectations. And Warren Buffett had the great line. He said, if you want to have a long-lasting marriage, you have low expectations. So everything is on the upside.
Right.
And so I always get a chuckle with his sort of sage advice, but manage expectations and understand the volatility. So the DNA of gold's volatility, bullion, is the same as the S&P 500. Over 1 day or 10 days or 60 days, it's the same. But most people talk negatively about gold as it's more volatile. It's not. The gold stocks are more volatile.
Right. Yeah. Yeah, for sure. Now, I've seen a couple of your calls. It looks like you've been calling for a $4,000 gold price. Is that still what you're seeing? And is that because of this G20, these banking cartels and the massive money printing, along with India, as you've already described? I mean, is that kind of what you're seeing, the $4,000 price?
Look up. That's where
Sky's the limit?
Yeah. Well, you just take a look at what happened in 2008-9, where the Federal Reserve Bank basically strapped on, I think, $3 trillion. And then 3 years later, we see gold hitting 1,900. It was trading between 700 and 800. It goes to 1,900. If we look at the amount of money printing today and what we see in the EU and Japan, one could easily forecast gold to go to 4,000. It would not be out of the cards. If you, by the way, use that CPI number that was used in 1980, gold's over 7,000. Yeah. So I think that being 4,000 over the next 3 years is not, hysteria or BS.
Yeah, I've actually said I've actually said higher, and I'm definitely not a legend like you are. But you look at in 2008, gold dropped along with stocks, dropped about 25% down to about 680, and then it rallied to over 1900 based off of that stimulus. It was the reaction the Fed did that drove it back up. And I've said that if we got the same size move from 680 to 2000, this time it would push gold to about 5,000. But as you just made the case, as I've made the case, the stimulus that the government did this time is way bigger than last time. So we're talking about just the same size move. But if it's 2 or 3 times bigger, then it could easily overshoot that.
Yes, and I said in 10 years, it could be 10,000.
Yeah.
I think it's very fair and reasonable.
Yeah. Now, I do want to just jump back into what you said about the CPI. So for those that aren't really familiar with that is, it's the Consumer Price Index. And so you probably know if you've been watching this channel, the Fed is always trying to push inflation. They want 2%, 2%, 2%. We won't dig into why, but they're stating that they can't get the inflation. And they look at something called the CPI, Consumer Price Index, to look for that inflation. They're not seeing it. But I know, Frank, you did a video recently and you talked about how that CPI is wrong and the number's wrong. Do you want to tell us about that real quickly?
Well, if you use the algorithm or the model that they used in 1980 to say inflation was running at 18 to 20%, and gold hit 850 and silver $50 an ounce, and Paul Volcker came in and took interest rates of 20% to stop it. If you looked at that model and you used it today, it would suggest that inflation is 8 to 9%.
Yeah.
So and I look at housing prices, just came out the data points, they're up 10% year over year.
Yeah.
So what is that telling you? That that's inflation.
Yep.
And I look at my legal bills, I look at property taxes, they're not going up at 1.3% or 2%.
No. Yeah. I mean, and I think everybody knows that. I mean, the Fed's telling us there's no inflation, but education's way up. Healthcare is through the roof. Where I live, I think homes are like 30% up in a year. And so we're seeing that even meat, steaks is up, milk is up. I mean, everything's up. So people know that. And so they just keep changing this goalpost, which I guess if we understand the game, maybe that's our edge a little bit.
Absolutely. And if you can get a cheap mortgage and buy a great property, this is the time to do it. I'm a big believer. If you have the income that the bank's going to allow you to do it, their ratios, whatever, but it's cheap money. And you're borrowing money below I believe is the real CPI number.
Yeah. Now, what about, you talked about China, Chindia, as you called it, but specifically with China, you talked about the trade wars and whatnot. And you also mentioned that we saw the central banks buying a massive amount of gold. I think most people that have been following gold know that China has been accumulating massive amounts of gold. They allow a lot of mining. They don't allow it to leave the country, et cetera. I think I heard you talking about somewhere at some point, maybe even China trying to back its currency with gold. Have you talked about that or thought about that?
Well, that was a big push by the Saudis for oil, that there be some type of a collateral. Otherwise, they're going to take U.S. dollars. And I just think that was a lot of positioning. But there's no doubt there is a move by Russia and China to basically derail that the global currency U.S. dollar, and all those transactions have to go through New York City, and therefore it makes it much more powerful on catching bad characters. I think that they want to have something else for trade, but it'll take a while before they can really derail the U.S. dollar.
Yeah, that's what I think too. I mean, the dollar is just too strong right now. So,
It's maybe not strong, against the euro short term, which I think is a farce. But what we have and what people have to really respect in America and love is we have common law. And common law means that we have private property rights. And in most of these other civil law countries, you don't have the ability to have a debate in court and a fight to protect your private property. It could be your blog, it could be your song, it could be your music, it could be your land. But this is so important that you do not have in other countries. So this common law thesis, along with the rule of law, is the strongest military in the world. And those two factors are really important to have a strong currency.
Wow, Frank, that is such an important piece that I hope everybody just grasps that, and I would encourage everyone to dig into that a little bit because that is what makes this country or has made this country so great and get to where it is because of private property rights. Private property rights are the underpinnings of freedom, and when you look at other countries, they just don't have that. And man, we could really dig into that, but we're not going to. But I would encourage everyone to maybe to go do a little bit of research into that because it's super important, especially right now because there's a changing tide happening in this country, and a lot of people on the left aren't really happy with private property anymore. So it's important to understand that, and we'll leave it at that, unless you have anything else to add.
No, that's true. It's a long discussion, but
yeah.
I do think it's really important to love what makes America great is rule of law.
Yeah.
And you know, for me, it was fascinating last year going to the Senate and Congress and being there. And what do you see when the president is speaking and looking up, which we don't see, is a painting of Moses and the Ten Commandments for rule of law, the concept. And it's just so important to recognize that's what allows a culture, a uniqueness to develop as it makes this country, nothing else can compete with it.
Yeah, I mean, because we need a level playing field, which unfortunately we're starting to see the rule of law not being met. But again, we'll table that for now. But back to the gold. So, I mean, I was saying that we could see based off of the stimulus and what happened in 2008-9, we could see it back to 5,000. You're saying 4,000. So, of course, you know, buying gold at 2,000 and doubling your money is not a bad thing, especially when other assets could be falling down. But as you mentioned, the gold stocks are much more volatile. I talk about gold stocks a lot. So volatile meaning we have way more upside. There's also more downside. How do you look at gold stocks for your fund and for your investments?
Well, one of the things I became frustrated with the GDXJ, and basically money goes into that by just $1 billion, and it goes into bad stocks and good stocks. And so I created my own ETF called Go Gold. And basically, this best business model in this gold space are royalty companies. The three big amigos are Franco-Nevada, Wheaton Precious, and Royal Gold. They're 30% of this. The other 70% are 25 names. I basically focus on metrics that if these CEOs screw it up, they're out. And I'm looking for protection of my revenue per share growth, the last quarter of 4 quarters, the cash flow last quarter of 4 quarters, free cash flow, high cash flow returns on invested capital, because all my back studies and research has shown where you have CEOs that focus on those metrics, those stocks outperform everybody else. And so I really focus on that level, and I can show that with math, that those companies that have the greatest revenue per share growth over the past 5 years and cash flow along with it have been the best winners, like Kirkland Lake.
Yeah. Yeah, I love what you just said there, because as I talk about gold stocks, I talk about for myself. I mean, I don't have the experience that you do for sure, but what I do is I try to look at the team, because I figure like good teams don't go to bad projects. And so if I start with a good team, then I can dig into the other stuff. And what you're saying is the best teams are the ones that focus on those numbers.
Correct.
Yeah.
And you just have to be able to have discipline. So there's 100 global gold producers around the world. There's about 75 of them in North America, from little micro caps up. And we just focus on those that this basket of tightness. And if you just bought the 10 stocks with the highest revenue per share growth year over year, each quarter, kicked out the ones when they fell below, you beat every index. So, but once you start getting over 25 names, then you end up becoming an index. So you have to stay focused on what you're picking. And there's a few stocks that, like one of the great turnarounds from 3 years ago was a company called Gran Colombia. And they were sort of got the religion that they have to focus on profit margin, revenue for growth, and cash flow. And this is a company that owed $45 million in short-term obligations and then took it to $150 million in the bank. So, well, gold went up. They became very structured and disciplined. They piled the cash up in their balance sheet. And this is, to me, is one of those great stock stories. And the stock went up at one time 7-fold during this run for us. And so now I look at any of those new companies come along that they have to have that discipline.
Yeah. Yeah. You definitely have to have the discipline. And one thing I actually, Gran Colombia had just recently come onto my radar. I just talked about it. One thing that I saw was how it looked like they had an asset that wasn't really being valued, and they were able to spin it off, which then gave it a lot more value, which then also brought the company. Is that kind of what happened?
Yeah, I think if you look at the math, that 5% of the production came from the Marmato Mountain, and it's a huge deposit, and it needed over $150 million of funding. And so what their thought process, it appears, was what South Africa used to do to de-risk the big mothership, which is Gran Colombia, high-grade operation that went from 90,000 to 250,000 ounces of gold production. This is a cash flow machine now, throwing out $250 million of cash flow. And so do they turn around and put all their capital into this one new project, or do they spin it out? So it had no value. They spun it out. Wheaton Precious comes along, gives the good housekeeping seal. They buy into the equity issue, and they give a gold note, and they bought and give them a stream. So I like whenever the major Franco-Nevadas and Wheaton give that good housekeeping seal, I like those juniors because our math says they usually outperform on other success analysis, like sports game film analysis. So I think that Caldas is an interesting spin out. Now it's all of a sudden worth $250 million. It was nothing on their balance sheet. And we've seen other companies do something different in the royalty business. Like I have $8 million in my balance sheet of royalties going nowhere. I spin them out into a new royalty company, and all of a sudden I've got $50 million in my balance sheet of owning that new public royalty company. Right. We've seen Yamana do it, Alamos Gold do it. So I think de-risking the flagship of Gran Colombia with this is a brilliant idea.
Yeah. So back to kind of what I was saying, where the good teams, I follow good teams because they can repeat success, right? They have the formula. So as you're saying, when you see a Franco, or like in this case, Wheaton Precious Metals, when they come in and kind of give them that seal, like put their money behind it, then that's just added encouragement. Like, hey, I'm onto something, but now that I see them jumping on board, like I feel even better about it. I guess that's what you're saying.
Yes. And it's real discipline, because they don't give you a check and say, hey, go build the mine. It's almost like the money comes to you as you prove that you're buying caterpillars, you're buying equipment. It has great processes like a financial institution has to have. Yeah. So their mechanism of funding and the ongoing process of releasing the money, we know, and so do investors, that money is going to go right into building that mine. And so you're going to have this Caldas is going to go from 24,000 to 160,000 ounce gold producer over the next 5 years. There's very few. That's not going to happen in Barrick. Barrick's not going to go from 5 million to 30 million ounce gold producer organically. They're going to have to turn around and acquire other people. So right. I think that both those companies can go through a re-rating.
Yeah, that's an important point. And in my recent gold video, I talked about like the kind of different layers of the gold mining industry, from the large producers and the smaller producers, the explorers, et cetera. And obviously, as you work your way down, the greater risk and reward that are there. So when you go into the Barricks or the Newmonts, you're just not going to see that growth, but they're also safer. When you go in these smaller ones, they're riskier, but they have massive upside. So you just do like a risk-adjusted kind of position size?
Yes, we do. And you know what, for us, we were a big position in the Gran Colombia gold notes. They're listed on Toronto. They've been being redeemed now throughout this past couple of years. But this was a beautiful piece of paper because it was paying me 8.25. I got paid on a monthly basis, 8.25 annualized. But anything over 12.50, I got a bonus payment. So gold runs to 2,000. I end up making 15% rate of return on my money. Wow. So my cash, rather than holding cash in a fund, I've got this gold asset always paying. The NAV hardly moves, but I'm always getting this big payout. Beautiful. Caldas turned around and did a similar raise. They raised close to $100 million on another gold note. The yield is slightly lower, 7.25, and the price tag of getting higher output is a higher level. But still, when I look at the opportunity, if gold goes to 4,000, I'll make a 15 to 18% compound rate of return on that note.
Wow, I need to get in some of those notes. That sounds like
what's the money fund going to pay you? 10 points.
Here, I got to make 7.25 with something at gold, and they're redeeming you. Nice asset.
Yeah, I like that. I'm gonna have to look into getting to that level now. Okay, so then you talked about the royalty companies. The Wheaton came in and did the royalty on it, so they're like guaranteeing funding as they stream it. Is that how that works?
Yes, and that's what they do, Mark. And you know, it's also interesting their efficiency. So I've always said, why did Buffett buy Barrick? He didn't buy Franco-Nevada,
right?
Because Franco-Nevada has the royalties on Newmont and Barrick's operations in Nevada.
Got it.
And you know that the revenue per employee at Newmont or Barrick's operations around $600,000 of revenue per employee. At Franco-Nevada, it's $24 million, the highest revenue per employee on the New York Stock Exchange. It's bigger than Goldman Sachs at $1 million. It's a very efficient ratio.
Yeah.
So I think that when you have the intellectual capital that they have, small employees, all scientists, rocket scientists in geology and metallurgy, etc. They go kick the tires of these operations. They go through all the feasibility studies. They ask a gazillion questions before they start releasing this money. So now this company is totally funded to take their production up. And I think each quarter will be positive for the growth in Gran Colombia, and also particularly now take Holmes.
Yeah. Now, when you talk about, as you just did, you mentioned they're, on one of the best companies, more big revenue on the New York Stock Exchange. So when you talk about the Francos, the Barricks, they're on those exchanges. But when you dig into the Gran Colombias and the Caldas, those are just like penny stocks, right? Those are just over the counter.
And, and over time, they'll eventually get listed there. Randgold was basically an RTO into Barrick. And Randgold is one of the best explorers and developers and producers in West Africa. And Dr. Mark Bristow did a phenomenal job. So you see that in his migration, then he went on NASDAQ, and then he gets listed in New York. So there's a migration here. So I would think that Gran Colombia, by this time next year, will be listed on NASDAQ or New York Stock Exchange. And, if they do that, they'll get a much higher rating much more quickly, because clearly the U.S. is still where you have the rule of law, you have the biggest capital market structure, and you have these pockets like millennials coming in at an unprecedented rate. I saw the last time in the 90s in the mutual fund world that now they're coming into the ETF world and individual stocks.
Yeah. Now, and I think it's also just just shows how small this space is. I talked about it on my video I did about Warren Buffett buying in, where, he bought he barely took any of his funds, and he took a big chunk out of Barrick. And this space is just tiny for these types of players. And so I think it is tiny, right? And that's why a lot of these are still just kind of penny stocks.
Yeah. And I think as gold rises and free cash flow, that more management's focus on this free cash flow, that means higher dividends. The generalist fund manager is going to start buying these names. I'll give you a classic, Mark. IBD, which only follows growth stocks, it's happened all over again in 2002. It started happening. It's happened just this year. And the past quarter, all of a sudden, Franco-Nevada shows up in the IBD best 50 stocks. Kirkland Lake is showing up in the best 50 stocks. So we're seeing that they have growth metrics like you're seeing AMG or AMD or NVIDIA is showing up there. So this is a game changer. And as long as these companies demonstrate high cash flow returns on capital, they're going to grow and their market caps are going to rise.
Yeah. And as investors, we're always looking for the early entries, the undervalued assets. So that's our opportunity there. I'm curious about where these mines are actually located. One big narrative that seems, I get asked this question probably 20 times on every gold video I do, is this big narrative about danger mines that are not in U.S. swap line countries. I'm sure you've heard that. Is there any truth to that? Do you worry about that? Is that something like, okay, that's a risk, but I kind of know what that is?
It's a great question, because I used to populate the data of an ounce of gold around the world in different countries in the public market. And you could see that an ounce of gold in Kazakhstan was really cheap for a reason.
no rule of law. The assets started going to production. The government would find a way to steal your asset. It's ongoing. But the market was pretty good at figuring out what an ounce of gold in the ground is worth in different jurisdictions. But if you ask the former CEO of Rio Tinto, who's on the board of Franco-Nevada, if you ask the former CEOs of both Americans for Anglo Gold, they're going to tell you that some of their biggest disasters were in the U.S. with the EPA. So, the environmental movement can be a big factor of risk. But what happens so often in these other countries is that it's better priced than an ounce of gold in different countries. So if you have socialists or Chavez came in and basically destroyed Venezuela, and immediately an ounce of gold started falling quickly. Any public company that an ounce of gold in Venezuela became cheap for a reason. But Colombia is more socialist in a lot of their political push that they have in the media, etc. But it's been a very strong nation in sort of protecting companies and trying to attract capital. There is a free trade agreement with Canada. There's a free trade agreement with the U.S. So I think that it's a lot less riskier than a country like Venezuela.
I love that answer. And so it goes back to kind of what we talked about already. These smaller producers are more risky. And so you want to manage your risk with your position sizes. There are risks there, but it's cheaper. So you're managing it that way. But also there's risks even in the US. And so there's always risk.
Look at Gran Colombia, trades at 3 times cash flow. The industry of the 75 North American, South American producers we follow trade at 13 times.
Wow.
So, okay, it shouldn't trade. It's going to get a re-rating. It's just a matter of time. And that re-rating can take it easy where it can get a double rating and the stock can double and still be economically more attractive than many other companies. And they just had a dividend policy. So they're one of those classic emerging gold producer that has free cash flow and they just started paying a dividend.
Wow. Get it. As I just said, if I get on those notes, or if you can get a dividend on a gold stock, I mean, that's an amazing thing to do. So, I know your fund specifically has institutional size investments in those companies, Gran Colombia and Caldas. So, definitely worth somebody checking out. I want to switch gears just a little bit. Something I ask everybody that I sit down with because I'm a huge believer in new technology, and I know you've talked about technology in some of your other posts. And I always want to ask, especially gold people, what they think about Bitcoin. Now, typically, I'm just going to tell everybody before you answer, typically, most gold people I've asked this question to don't have that big of an answer, but you do. You're heavily involved in Bitcoin. So tell us about that.
But my journey was I was trying to create an ETF, and I quickly learned at $1,000 an hour legal bills that it just wasn't going to happen. The SEC in the US, OSC in Canada, they're so fearful of anti-money laundering laws that some hacker gets Bitcoin and shows up at an ETF on New York Stock Exchange or Toronto. So it was a cul-de-sac you're driving down. It's a dead end. So with that, I had all this knowledge, and friends of mine in Vancouver said, there's a speculative idea of mining these coins. I said, well, mining virgin coins, wow. When you validate a transaction in cyberspace, you basically get paid in a brand new coin, and it has nothing. It's clean, it's spotless. It's actually worth more, and therefore you have no AML problems. So I took my capital and said, okay, let's launch the first industrial scale crypto mining company. And all of a sudden, $1 billion came into Canada, and all these other mining started coming in. But Hive had the first mover advantage, and Hive is the most liquid name. And we are also the biggest in Ethereum. Ethereum is going to be the backbone. Bitcoin, to me, is going to become like Andy Warhol art over time, whereas Ethereum is a smart contract, and any new ICOs are all based on that algorithm, or what they call DFI, the decentralized financing. They're all based on that backbone. So I remain very bullish and constructive, and Hive has become a proxy for that investor that wants to own a crypto, but they're afraid to go and buy an exchange and hear that their account was hacked. So they bought Hive. Institutions like Fidelity started off and helped us out with $100 million of building up these facilities. We mine only with cheap green energy. we're in Sweden, we're in Iceland, and we're in Quebec, Canada.
Yeah, was Hive one of the first, if not the first, like publicly listed like blockchain crypto company?
Yes, and it went from a $30 million seed round to $1 billion in market cap.
I love this, and I just want to hit this point home because I talk about Bitcoin a lot, and I talk about gold a lot. In my opinion, gold and Bitcoin are both fighting the same war. Hard sound money against inflation, against runaway printing, right? So I believe gold and Bitcoin are both fighting the same war, and I talk about both, but like no matter which one I'm talking about, I get people that comment that say, I would never, only buy gold, I would never buy Bitcoin, or only buy Bitcoin, I would never buy gold. But I'm like, as an investor, why? Our job is not to pick the one, right? Like we invest into multiple things. And obviously you see the same?
Yeah, I see it as an alternative asset class. And I think that if you have a virgin Bitcoin and it has a 64-digit character, it's going to become art. It's going to go up like an Andy Warhol painting the multiple sets he had of Mao. And I think 5, 6 different colors, 1,000 prints give it $1,000, and they went to $250,000 each.
Yeah.
And so with that, I think that that's what's going to happen with the Bitcoin. Whereas I think the Ethereum and that protocol and some of the other ones are going to become more important as the crypto space evolves. But we're seeing today in Switzerland better laws for the crypto, respecting it. You're seeing Europe is talking about the head of the IMF of coming up with a digital money. And I thought it was very funny that crypto surged to 19,000 for Bitcoin, and then the crash came just with the futures market, was able to suppress it. And JP Morgan knocked Bitcoin every day, every week until February of 2019, just when gold's golden cross took place. JP Morgan came up with their own digital stable coin.
Of course.
And then they stopped the trash talk, and then you start seeing a new evolution taking place in the crypto ecosystem.
So I didn't plan this question, but you've been forthcoming and said you see gold getting to 4,000. Do you have any ideas? Do you think Bitcoin gets to 50,000 at some point?
It has to do with Metcalfe's law, and that's an important law that they use to when anything goes viral. It can happen as long as there's an exponential growth in people looking and talking about it. And I think what will happen is will the Robin Hoods be able to give you fractions like they are a fraction of a share? Like you can get 1 share of Amazon or Tesla. Are they going to give you those fractals? Then that will basically allow that to take place.
Yeah.
But if Berkshire Hathaway can go to $250,000 a share, then why can't Bitcoin go to 50,000?
Yeah, I see. I mean, I did a video on how it gets to 100,000 easily, and you just figure, I mean, if I'm buying it as for the same reason as gold, getting money out of the banking system, and gold's worth 10 trillion, or there's 30 to 40 trillion in offshore bank accounts, which is the same thing, get it out of the banking system. 30 to 40 trillion there, there's 10 trillion over there. Like it couldn't get a few percent of that. Like it can get there pretty quickly, but.
And I think what's important for your listeners is the ecosystem. When you talk to crypto kids, they talk about this ecosystem and how Bitcoin then came Ethereum. Ethereum has 30,000 kids around the world are part of that ecosystem. And I'll give you a classic is they discovered where someone was hacked and they came in and stole some of the coins. These kids came in and took the rest of the coins and then put them in a safety deposit box and told people how to come and validate to get them. They do it free. I'm talking to one of the original Ethereum coders. He was into the green movement. And then all of a sudden from there as a coder, he left going to green. He went over to crypto world. But there's 30,000 of them working free basically around the world.
Yeah.
Validating the transactions, validating the software. Then there's other entities that are getting paid for developers, etc. So you don't see that for junior mining, 30,000. So I think we have to really, for me, is respect that the emotional and intellectual capital that's behind this industry, that it will evolve and these coins will, like Ethereum, Bitcoin, trade higher.
Yeah. Awesome. Well, that is so much information that you've shared with us. I really appreciate that. I love your perspective that you can see gold and Bitcoin at the same time. Like I said, most people can't. So appreciate that. Yeah, I think we'll go ahead and wrap it up with that. I know we need to keep it short here, but I really appreciate the time that you've given us so much. And I just love to learn as much as I can. Success leaves clues, I tell everybody. And so I'm trying to just suck
very
as much.
kind, Mark. Very, very kind. And it was great. You have wonderful questions to ask. So you keep me on my toes. Keep going.
All right, Frank. Now, I real quickly, you do write a newsletter. And I think you said there's like 50, 60,000 people on that newsletter. Where would people go find you if they want to keep up with that?
Go to usfunds.com and look up Frank Talk.
Okay, Frank Talk, US Funds. Okay, and so for anybody listening, I am going to go ahead and link to it in the show notes so you can find that as well. And with that, we'll go ahead and wrap it up. Thanks so much, Frank. I appreciate your time.
Happy investing, my friend.